Hey, I want to make a video on this. This is a pretty important lesson. One of the things that we teach in our boot camp class, nonstop. It's really one of the keys to being a trader. One of the questions I get every day are, how do you find the stocks that are moving like this? Why are you always in the best stocks? It seems like I pick the crappy ones. Well, one of the things as a trader that you have to understand is what has momentum out there? What's in play? See, every month there's a series of stocks. Maybe there's two or three or four or five that are in play. They have some type of near-term catalyst that's gone off. Then it's a perfect storm of expanding volume, the proper breakout chart. And if you can get all that, you end up getting a perfect storm of momentum that can carry on for potentially weeks. And you can really ride into profits. This stock, Dgly, we've been trading this since it broke $4. And just in the last week alone, we made over $6,000 in this thing in a series of trades, not even in one shot, as the stock was in play. And it gave us a lot of different opportunities. So, even after this big run, we still had the stock on watch as, overall, I was thinking if it come out of this range, it really could set up a really, really big run, maybe to $14 to $16. And so, we have the stock on our watch list, and, we come in on Monday and the stock has, a gap up. You can see right here, it closed at $8 and it gaps up here down to $9. That's a nice strong gap up of 10, 15%. And so now that we know that we have the breakout on the daily as the gap up is coming up over here, all we're trying to do is make sure that we find a really low risk entry. And so one of the favorite plays that I like to do once I have a setup on the breakout, once I have a breakout setup, is to play a stock for an opening range breakout. So that's what we call an ORB. And so, one of the things that we always teach our students is that you have to have a playbook of trades that you can do at the open. The trades that you do at the open are very, very specific to just that, the open. And they can only be used for that opening range plays. And then once you get past your opening range plays, there's a series of setups that you do in the midday. And then there are a series of different types of setups that come about end of day, like a day-long consolidation or an end of day gorilla run or whatever you want. But those are kind of the three stages of the market. And each stage of the day has a little bit different of a setup. And so, our first batch, we added at the open, in this particular trade. So if you go, let me take a look here. But, if you're going and you check this, so our first batch, here, we added it at $9. That's where our first batch is. And you can see here, we were adding, I was scaling in and out of the stock nonstop. We made 1, 2, 3, 4, 5, 6, 7, 8 trades. 8 trades, but they were all solid trades. You're talking about $500, $600, $700 gains, $1,000 gains. And that's how you want to do it. As a trader, I'm not trying to hit home runs, but I'm trying to be in the best stocks and make sure that I'm able to hold for the real move, which is that multi-dollar gain. And then I'll be adding and subtracting shares along the way as I see very specific setups intraday that follow the plan of what's going to happen for that part of the day. And so, at the open, right at 9:30, we ended up taking an opening range breakout trade. And then it's just a matter of scaling out. And so I like to always take a little bit of profit on spikes and then hold a core position. So then the next thing is really making sure that we're able to play this stock and that it's acting in a manner that allows us to add more shares when we need to. So one of the things I watch about this stock is, I noticed that once it gets kind of above this key level, it's holding there really, really well. And it takes 20, 30 minutes for it to kind of come out of this range. But when it does, you know that its next leg is coming up. And so as this stock is consolidating here, I'm watching it very closely to see if there's any signs of breakdown. And if it does, I'll get out of the stock. But, you can see here we essentially have a trend line support that's kind of getting built. And so I have an easy way to really manage my risk now that I'm in the profits over $1. I just want to manage my risk. And if it holds, then I want to be able to add to my position. And so that's what happens later on is it thrusts, and then you can see here we get a whole nother flag. And so we add more shares on this bad boy, and then it's just about, selling on spikes and holding for the real move. Now, the mistake I made in this trade, the first batch, was, I sold all the way into the spike, and I think I got out around 1150. But I had no reason to sell. That's one of the things. You really should have a reason that you sell a stock. And I didn't have any reason. The momentum was really just getting started. But in my eyes, I convinced myself that, it had been too extended. But it wasn't really breaking any level of support. And so I should have been holding a core piece still, a bigger piece for that real move. Is now once you get to a 12, 13 area, right, you're talking about a huge gain. And it really will make or break your month. And so, the stock pops up, and then you can see what happens here is a really kind of easy-go-lucky pullback. And that's what I want to see. When you have a big momentum stock that's up a lot, if it can pull back to support and it does it in kind of a non-violent manner, that tells me that this stock is ready for more. And so as this stock starts to flag, this is what we call a flag pattern. You can see right here, once it exits this flag pattern, right, we're adding more shares and then playing a run basically back to high of days. That's kind of one of my targets. And then what I like to do is kind of hold a position for the real move. And then you can see what happens is, it pulls back and it starts to form, and finally has our end of day setup, which is usually kind of happens between 1 and 2:30 p.m. Where you'll get some break of range, and then you get the next leg that goes up. And so, we add more shares here and play the run to the high side. So, that's one of the ways that I like to play momentum. And once a stock is in play, I'll keep it on my list and I'll trade it over and over. So one of the things that you'll see is that, over this coming week, we traded the stock actually a few different times as it was on my radar from that previous day. Once a stock pops like this, give it a couple days rest, and then it usually will be back out for more. And so, we played it a few more times over here, taking some really, really good gains. And, that's it. Out of my trades last week, it's not like I traded a million different stocks and had a bunch of different scans going. The gains that I made, a lot of it was from, really trading momentum and then making sure I re-hit those stocks. On Friday, we did the same type of thing. I made like $4,000 on Ivan. We traded to the long side, really take a nice gain. And then I do the same thing on the short side is once I realize that that stock is done, I'm re-shorting it and playing to the flush. And so being aware of momentum and stocks in play is one of the best ways to find your stocks. And so keep your eyes open. Always be scanning for big chart breakouts, expanding volume, near-term catalysts, and you'll have the opportunity to be in these type of stocks. And then it's just about really lining up the setups and making sure that you manage your risk, and you can really get some outsized gains. So that's it for now, guys. Let me know if you have any questions. Take care.